The following was recorded in front of a live studio audience at the Studio 21 Podcast Café. This is the United Podcast Network.
If you're building or buying or selling a home, the Real Estate Crew's got news for you at the Real Estate House Party.
With attorney Rick Carter,
Real Estate House Party.
paralegal Kathy Holtshouser,
Real Estate House Party. Come in, have fun.
and comedian Tony V. Now, here's real estate attorney Rick Carter.
Where the hell is he?
Oh, welcome and thanks for joining us here for most of us at the Real Estate House
Where
Party.
the heck's Tony?
I don't know. I got a text from him yesterday saying he was in Aruba.
Oh.
Well, he deserves it.
No, he totally deserves
Because
it.
you can't work
His
that
life
hard
is
all year long.
very, very hard.
I know.
And he's never, ever, he's always on the go.
He's always on the go.
Yeah.
So he's down there wearing pants and all that. So
No, he's not.
I know. I'm just trying to
And then
build
we
it up
have-
a little.
then we have
And
this other guy that was
we have
supposed
the
to show
Iceman's
up
coming, but he's here now.
For a live show.
That's good because me and Kathy were going to be talking about. Well, don't take too much time.
No, you don't have time to prep, John.
So we got the Iceman on today. It's good because I would have had to talk about mortgage limit increases.
And I would have been like this the whole time.
Yeah, here you go. No, go ahead.
You know what? It's your world, John, and we're just living in it.
Without you and Tony here, I had to hear these two talking about their new haircuts. Yeah.
I don't have a new haircut.
Oh, okay. All right.
Pipe down.
How you doing, Iceman?
Hi.
Hey,
Hi.
what's going on?
We're a well-oiled machine.
Yeah, no, I was
How are you, John?
good.
Where you been?
I was lost, so I pulled over for directions, and now I'm up here. So,
You're
What's
not
your name?
lost.
Don Gavin?
Yeah.
I told you about the directions I gave him that time.
Yeah.
Yeah, he ended up
Yeah.
at Rockport. I said, he goes on. He says, I don't know, I'm driving around some rotary. I said, there's no rotaries in North Reading. I said, where are you? He goes, I just saw a bridge. And I go, there's no bridges and water in North
I went over the
Reading.
Agawam.
That's what, Anasquam.
Anasquam.
That's what did me over the top.
Poor Don.
How you doing, John Marroni? You doing good?
Yeah, I've been
We
doing
wanted
good.
you to bring on today because it's coming towards the end of the year, and we always like to have good family
So
members. Oops, go ahead.
I read an article in the paper that consumer spending is down because
Really?
Hang on a second. Not your house.
She's coming with negative stuff already.
No. Consumer,
it is a little
consumer
bit.
spending is down because their discretionary income has been reduced due to how expensive
Right.
a lot of things are, like
Well, in
oil
the summer
and gas.
they were going
and-
a little bit crazy on it, and
Yeah.
they're starting to figure it out.
But the good part of that is they made a decision not to hike the interest rates because since the consumer spending is down, it's kind of evening out inflation.
Well, no, I'll tell you why the consumer spending is down. The credit card debt has exceeded $1 trillion.
Wow.
I know, but that doesn't mean the consumer spending is
because
down.
now they're maxed out on their credit cards, and there's nothing you can't spend.
Oh.
You can't tap into it. I was saying this for a year now. People start charging up their credit cards, pay the minimum, charge, and then they hit the max, right? Because I know
and their minimum payments aren't even taking it down, so they can't use it anymore.
Right. So next year you'll be having bankruptcy attorneys on the show talking about how busy they. Actually, they won't be on the show. They're so busy.
Right.
Yeah. That's they're maxed out on their credit cards. That's
All right,
what's
so
going
let me
on.
ask
Wow.
Oh, and one more thing.
Yeah.
Because like even a couple of I got
Came in with your guns blazing here.
no, I got a couple credit cards. I got huge available credit. And now they're chopping it. They just you're.
Oh, really?
Yeah.
Oh, is that what they're doing?
Why are they
Just
chopping it?
unilaterally?
Well, they're trying to get ahead of it.
Oh, okay. So they're notifying their clients or customers saying,
Yeah.
listen, you had 10,000, but now we're dropping it down
Well,
to
that
5.
happened to one of mine. It wasn't. I don't use it ever. I make that one purchase a year you tell me to make
Yep.
to
Yeah.
keep it active and whatnot. But they said I think I had a $20,000. I don't need that. And they said we've reduced your thing to
Yeah,
$10,000.
they felt that way too.
She doesn't need that. But it doesn't bother me.
The credit card I got without even my real identity.
No.
I put the wrong social security number in, and they gave him a.
I was mad. They only gave me a $10,000. I said, my credit's pretty good. I don't know why I'm only getting $10,000. It's because it was someone else's social security number.
Wow.
Yeah.
Yeah.
Not that we.
No, you were
advocate.
totally approved.
Yeah. Oh, I was definitely approved.
We got the card
They're
in the
lucky
mail.
we're good about it.
We got the card in the
I could
mail.
be using that guy's social security number for the rest of my life. So anyway.
So, but tell us. So, the rates are going to come down a little bit.
Yeah.
Yeah.
Are we going to see, a refinance boom of sorts?
I think they're going to bring it down gradually. Is that right?
Yeah. It's not going to be.
It's not going to go from.
Yeah, but you got 8%ers that are 3-year adjustable, right? For over the last year,
Mostly
you've had
5. You didn't give out a lot of 3 years, right? 5-year adjustable.
No. It's probably 5 year.
Yeah.
But they're high. They're at 8%. So do you think they're going to
adjustables?
Yeah.
No, I never seen them that high.
I saw one the other day. It was 7.25.
Well, that's 7.25.
Well,
Wait,
I'm rounding. Shut up, Rick. I can leave here. I'm here of my own free will.
But
I would love to have you for a client. What's the rate? I'll round it.
Ballpark.
I'll give you
7,
a range.
9. I know there's a 7 in there somewhere.
Are the rates going to come down enough for people to refinance into a fixed?
I think
Eventually.
so. Yeah. I mean, next year they're saying for a 30-year fix, it'll be in the 6s.
But that's still not bad.
No,
very
it's
good.
not. It's not.
very good.
It's enough. It's enough.
From the 8s.
Yeah.
So correct me if I'm wrong, but they didn't make any changes in the hikes.
Right.
And they're probably not going to do it because the last couple they haven't, right? But I think they've already factored that in a little bit.
With the rates now.
Yeah.
With the rates now, but I think the big question is what are they going to do in the future? So I think that's what they're really concerned. So I think, hopefully the rates just start coming down, as we're saying. So 5s or 6s potentially. But should buyers be waiting for those 5s or 6s?
No.
because.
No, says the loan officer.
Right.
Well, I mean, especially around here, the prices of the homes are
Keep
not
going
coming
up.
Right.
Right.
So you could always.
So you're always chasing the market.
Yeah, and if let's say the rates drop significantly, now you're going to look for a house. Now you're going to have that much more competition on the house, and if you can afford the payments.
So let me just play devil's advocate. So if the rates come down considerably, some of the people that have been sitting tight on a 3% interest rate on their current mortgage, they might be able to go somewhere else with a reasonable interest rate, and maybe the market will get flooded with houses on the market.
Oh, why can't they go now?
Because most people are married to their rate.
Okay, why?
John has some answers for that.
Okay, so I don't know why. You're the expert.
Here we go. He's already got it written all out.
So that's why I was just playing kind of devil's advocate. A lot of people love their interest rate.
You look like Nomar Garciaparra getting to the plate. You're taking your time, fixing your gloves.
Yeah, I haven't done infield for a while.
Do you need a comb?
No, that ship has sailed.
Okay.
All right. So what she is saying is it that bad when people buying with these interest rates now?
Well, let's find out.
I know.
I know
Okay.
he has the
I
answer.
know he has the answers. So.
As long as it has nothing to do with crabs, we're good.
Oh.
No. No, we're good. We're good. All right. So we were talking a little bit in our pre-show meetings here where you were thinking it's not quite as bad if someone's buying with these interest rates.
Yeah, so
tax consequence.
Well, yeah. So I'll get into all that. So forget interest rates for now. Like when someone, let's talk about lifestyle. Someone's going to say, "Why do you want to move?" And they're going to say whatever they're going to say. Oh, I love this house. We check off all the boxes. We need that extra room anyways. Our family's growing, or my in-laws are coming in, and we need a place to put them. Checks off all the boxes. Okay.
Yeah.
So why aren't you buying the house? Well, because the interest rates are high. Well, when someone says that, what they're really saying is, I'm having trouble trying to.
I like the smirk on his face.
Yeah.
You know,
I'm
Can you
having.
let him finish, please?
no. Took you long enough to get here. Let's talk for a while.
What they're really saying is,
Yep.
help me with my cash flow. That's what they're really saying.
Yep.
All right. So I did a quick scenario. Let's say someone a few years ago had a $600,000 mortgage at 3%, and let's say now it's paid down to $550,000.
Yep.
So, and today's market, I just checked, it was like 7% you can get right now, and at 600. So apples to apples.
Yep.
The $600,000 mortgage.
Or now $550,000.
Yeah, but still paying payments on $600,000.
Yeah.
Yep.
So that's monthly principal and interest is $2,529.
Okay, I'm gonna write this down.
Okay.
Yep.
And at 7%,
Yep.
it's $39.92. So it's a difference of almost $1,500.
Oh, okay.
Okay.
Okay. 25.
Yep.
20. Yep.
Yep.
Okay.
Yep.
So then they're like, all right, well, let's say they're like, well, where am I going to get $1,500 a month? I said, well, you're going to move to another house. Let's say you're going to get, you want to put all this money down. You owe $550,000. Well, why don't you just get a new mortgage of $600,000? So that extra $50,000, all right, you have a $25,000 balance on your automobile, which is $700 a month.
Okay.
You have $25,000 in credit cards, which is costing you $700 a month.
Okay.
Easily.
That's $1,400.
There it is.
You're paying it off. So there's $1,463 versus. So now you're there. But wait, there's more.
Okay. Dun dun dun. Dun, dun, dun,
Wow, this
dun.
is turning into a real cliffhanger show.
So they're married. The interest at 3% for the year on $600,000 was $18,000.
Yep.
Well, no one's going to realize that because they have a standard deduction of $27,000. The interest at 7% at $600,000 is $42,000. So it's a difference of about $24,000 in that they can actually write off, which comes out
As
to,
opposed before it was only 16, 17,000.
Right.
Yep.
And so let's say they're at the 25% tax rate. Let's just blend it, right? So they get $6,000 back on their taxes, which is $500 a month.
They wouldn't have had before.
Right. So $500 a month.
You following this?
Yeah, I am actually.
So they paid off their credit cards. They paid off their car loan.
So they have an
And
extra 14.
So it's actually cheaper. The higher interest rate on my plan is costing them $500.
Have you tried this? Have you tried this on a real person?
Yeah. Under my plan.
Call it the Johnny Marroni plan.
That was like Al Gore. Under my plan. It's like no one voted for him. No,
So I kind of like you always spin things, like, you're really good at helping people with their.
I analyze things. I don't spin.
No, I'm sorry. I didn't mean it like that. I think you think outside the box as far as like when people are getting divorced and you do the math for them and you help them think through whether I should keep the house or should I refinance or should I whatnot. But so I'm not saying spin as in a bad, but you kind of like move,
as a positive outlook on it.
You move all the pieces around so it makes sense to buy that house that you really want.
Now, the other thing about that $25,000, you on that credit cards, how long does it take to pay off a $25,000 credit card?
Oh, it's probably eternity.
It is.
Yeah.
If you're only making interest-only payments, you're just...
Well, that right there is the stupidest reason.
Well, you just made me think of something. That extra, the $25,000 on the car loan and $25,000 on the credit cards.
Yeah.
Now that we kind of translated that, converted it to a mortgage.
Yep.
In a weird way, now
they're paying 7% on stuff that would have been,
and it's tax deductible now. You made it tax deductible.
But your credit card might have been up at 17%,
or 24%.
Yeah, or whatever.
Yeah, absolutely.
And your car loan
even
was
auto loans are like 12% now. Even people with perfect credit, they're like around 10% now.
Yeah, they're tough out there.
Oh yeah.
So as our caveat, you should check with your accountant to see if you can refinance and still claim the same amount of interest as well, right?
Yeah,
That's for another conversation. We're not going to do it
write off auto
No. What he's saying now, it's
and-
a mortgage is paying it off.
Right.
So
but
now you have a
can't-
mortgage.
Oh, yeah, hold on
now
a second.
you're
Wait a
writing
minute.
off.
Hold on. This is disclaimer. This is not tax advice. You know, the opinions that I just said are not even my own opinions, let alone the show.
So what do you think?
You definitely want to talk to your accountant
as far as write-offs and all that.
Yeah, the comparison because again, that standard. A lot of people don't really realize what the standard deduction is because the interest rates were so low. And everybody's just taking the standard deduction. Very few people were able to exceed that. Maybe someone that lives in that's maybe $20,000 a year.
So if
taxes.
if the standard deduction is, would you say 24,000 or 27,000?
Yeah, it's like 27 and change. Yeah.
So
for a married couple.
But if you're a married couple and you only paid $15,000 in interest, you can't take that standard deduction, right?
Sure, you can.
Oh, you can.
Yeah.
Okay.
Yeah, you just don't even bother with the. Like the last few years, I don't even bother, my accountant, I don't even bother giving them the interest statements. I go, just do the standard deduction.
Right, right.
Are people staying married just so they don't have to buy a new house?
Well,
Oh, my God.
In fact, yes. And that, I talked to them because I convinced.
That is a compelling reason to stay married.
It was a question.
I love my house.
But I hate my husband. But it is a low interest rate.
Yeah. But you hate going home to the house because he's in the house.
Once it gets to 5 or 6, he's out of here.
I love marriage. It's just my spouse I can't stand.
All right. So
I'm telling her.
Yeah. So
go ahead.
She already knows. Yeah.
So
she's got I like this one. Yeah.
Yeah. That's good.
Well, after your 5th or 6th, you should get it right? No, we're only kidding about that.
I don't know. Everyone's got a weak spot. You ever see people like you'll see someone that has a dent or a couple dents on the left side? You're like, that's their weak spot. Stay away.
So, do you ever have anyone come in and say, "Listen, we're thinking of divorcing, but I got to start thinking."
We really love our interest rate.
Yeah, all the time.
Right.
Okay.
So, and I said, all right, let's talk about that. So, I got a comparison here, so I'll just keep it simple, where they felt they couldn't afford the higher rate. The guy wanted an equity buyout, and what I did is paying off, take a little higher equity buyout, but we paid off auto loans and stuff like that. So on a cash flow standpoint, it came to about the same.
Okay.
And then here's the thing too.
But that was simplifying. Can you help out our audience?
Oh, you know what? Just put this up on the screen so the audience can see, so that they can follow this.
Our IT person isn't here today.
Yeah, let's just put this up on the screen.
That'll help if we can get that on the screen.
Yeah, I'll just point
we'll get it all
So
figured out.
Here's what people don't realize. How we're talking about standard deductions.
Yeah.
Okay, $27,000. Well, if a spouse wants to keep the house, they get divorced. They are now single.
13.5.
Yes. So now they have more of a write-off.
Another reason to stay married, people.
So
you're saying there's more of a write-off.
Yeah. All right. The example here, which the studio can't see right now.
No.
The person was getting $150,000. The spouse was getting $150,000 with the buyout. Portion of that they were paying off all, the auto loan, which was like $700 a month, and credit cards, and then end up costing just only after-tax dollars, $300 a month is what it costs. Now, here's the thing. With divorce, the idea
How do you think Tony would be handling all this right now?
He'd be like this. But since we're not Tony.
Or like this.
Well, one day I saw him go like this. And he literally was like way in the back, just staring out the.
I thought he would have done quite well.
No.
All right. So.
All right. Sorry, we interrupted.
So can you just go slower on the husband and wife? The husband wants to stay in the house.
Yes.
So he gets an.
No, the husband's leaving. He wants like $150,000.
Okay. So the wife is going to stay in the house. But she has to buy him out, and that seems like it's going to be a daunting amount of money.
So she wants to get it. She'd have to refinance to pay him off.
Correct.
And that's going to be at 7%. But the existing rate's 3%. Mm-hmm. Is there a negotiation involved where now, Mr. Husband, it's now 7%. We don't have as much we can give you. Have you seen the couples negotiate that as well?
No, because when you do an equity buyout, it's not considered cash out. It's considered rate and term. So I can go up to a 95 loan to value on something like that. You might pay some PMI, obviously, because it's above 80, opposed to a cash out refinance where the highest you can go is 80 loan to value.
Right.
So, and you can pay off, if it's part of the divorce settlement, all the debt can get paid off as well, and it's not considered cash out.
Do they ever see you after the separation agreement is signed?
They shouldn't. Some do.
Right.
I know.
Well, things are set in stone, right, at that point.
Right.
Yeah. So
unless you go modify it, which is a pain in the neck.
No one modifies
No
it.
one likes to modify that.
No one wants to go back to
when we close loans and we read the separation agreements, you got to close by June 1st. You got to put it in the market. You got to
June 1st, 2021. Here we are.
They blow by those dates all the time.
The thing too on the divorce, again, the studio audience can see this. It's not a typical. These are the numbers. Does it make sense? This is divorce.
I think that's our point. I mean,
things come with a cost.
Yeah.
Someone says, I go, what's your vision? I want to move on with my life at all cost.
Yeah.
Okay, I put it in dollars. That's how much it's going to cost.
Right.
Period. Because you let's say the husband being greedy and says, no, I want this, and I'm not going to pay off the debt, and now the wife can't even afford, can't even get qualified.
Right.
So I'll say to the husband, you're getting nothing today.
Right.
Like nothing.
Yeah.
I go, but if you, maybe give in by $25,000, you're going to get $150,000 in your pocket today, right now. You're going to be off the deed, off the mortgage. You don't have to worry about the mortgage being paid. You don't have to worry about any repairs to the house. You're gone. What are you going to do if she can't afford it? I'm going to make her sell the house. Okay, your kids are a sophomore and junior in high school. You tell them.
Right. Right.
Yeah.
Right.
Well, at that point, his name's off the deed. He can't really,
Well, the problem with the divorce is I think that, as the numbers are the numbers, right? Hard, cold facts.
Yeah.
But there's so much emotion involved in that house with the separation of two spouses.
Right.
So I think that the lines get a little bit blurred on pragmatic, reasonable, rational things to do to get it done.
Hey, did they, not to change the subject on divorces, but they changed the dollar amount and how much you can borrow now?
Yeah.
What do you mean?
The limits.
Oh, just in general? Yeah.
The limits went way up.
Do that?
Yeah, it's funny.
Oh, you happen to have that?
Yeah. Hold on, I gotta take this. Hold on.
You do not have to take it. I'm not allowed.
Was
You're
that
not
your
allowed.
first wife?
Yeah.
Stop talking, Johnny.
Yeah. Just.
No, so we should tell people about the higher limits now.
Yes.
Which is crazy. Do you remember a jumbo way back when
Yeah,
was like
it was like
300?
No, when I said it was 175 when I started.
No.
Isn't that
Yeah,
funny?
actually 180. Yeah.
I think I remember that.
You
Like
think about that around here.
1995.
Who has a mortgage for 175?
That's a line of credit.
I know. That's the credit card you were talking about. All right,
That's a car loan.
I know. So how much do the amounts go up to now?
Okay, so currently single family conforming is 726,200. Come January 1st, it's going up to 766.
Wow.
And then the high balance will go up to 862.
Wow.
High balance for family, Fannie Mae, 1.65 million.
No.
Yes.
Well, you know why? Is because they're going to get a ton of rentals. Like it's going to be a moneymaker. So
Wow.
they're right. So it's more of a more conservative.
Oh, they've thought this out.
Right.
They know
Yeah.
it's going to.
They didn't just throw numbers at the wall to see what
right,
stuck.
Right. And plus, you still have to qualify that. It doesn't mean they're going to give everyone who comes across.
Right.
But if you're buying a four bedroom, four family house in Somerville and the rents are what, $4,000 or $5,000 a month,
Right.
and there's say one is going to be owner occupied, so there's 5,000 times, so $15,000
Right.
in rental income coming in. Do you think they're going to be able to pay their mortgage?
It should be all right. Now, does it matter that much now? Because the jumbo rates seem to be pretty good for a while.
They are. Yeah.
So, did it matter if you jumped into that jumbo range anyway?
If you got to have a credit score of like 740.
If you're doing the jumbo.
Yeah.
All right, so let me ask you this.
So, but how hot is that? A 740?
You'd be surprised because let's say someone, for the heck of it, they got an offer of a 0% balance transfer and they max out the card. That's going to bring your score down.
Right.
Like things like that. And then, because they got all the algorithms, they're probably like, someone's on the run.
Yeah.
Right.
All right, how about this program? Do you have anything, not that we're promoting, we haven't said where you work there, but a lot of people have problems. They want to buy the house.
Yeah.
They don't want to sell their existing house. Do both those ratios for both houses factor in? Or is there a way? I don't think so all the time.
We have a program. It has to be on the market. It has to be listed.
Right. No. But that's not his question.
No, that is my question.
No, but you said they don't want to sell this house.
Oh, before they buy.
Oh, okay.
Yeah.
All right, sorry.
No, that's a good distinction.
So if it's not on the market.
That's a good distinction.
If it's not on the market.
I'm coming back. Don't worry.
If it's not on the market, we have to debt them for it.
Right.
So in other words, when you debt them for it, they have to be able to make this mortgage payment and this mortgage payment.
Yes, correct.
Qualify.
Right.
To qualify them, they have to have enough income to pay for both
if you're
mortgages.
only making $100,000 a year, it's going to be tough to buy that second home.
Right.
But if it's on the market, you don't debt them for it because
we have a program for it. That's like Fannie Mae has a program, or their guideline is they don't have to debt them for the house that they're selling, only if the person that buying their house can produce a clear to close commitment. Now,
so that's Fannie Mae.
Yeah.
That's not. Yeah,
but
that's
good luck trying to get that.
The
that's
only
way
reasonable.
You can get that is if you put it in the purchase and sale, saying the buyer.
But when they get cleared to close, John?
Yeah.
Yeah.
I know.
Yeah, day of closing.
Right.
I mean, the day
but
before.
sometimes that might make a big difference, just a couple days.
Right.
Because otherwise.
I know, but to Kathy's point, you've already bought the other house. You're sweating it out.
You are sweating it out.
For your buyer to get you a commitment letter.
I think that anyone that has a substantial mortgage on their old house and went and bought a new house, a substantial mortgage on that house, that's going to be a little thorn in their side until it is cleared to close and closed.
The other thing, too,
100%,
is you could lease that out, your existing home, right?
You can.
Would they debt that? Well, then they take that.
If it's already being leased.
What you need, you'll need a lease, and you'll need to show if you're Fannie Mae, it's like 1 month that they
paid
in your account. Freddie Mac is 2 months.
Okay.
That's not a hard condition.
Right.
Yeah.
And then so what they'll do, whatever the rents are, you take 75% of the rent and then subtract it from like the total mortgage payment.
Okay. So I guess to wrap up, you have so much information, John. Thank you for showing up actually, But to kind of sum everything up is.
Well, you got to get going?
Yeah, I do.
Haircut day.
No, it's not haircut day today.
Okay.
I just got shit to do.
What if our listeners wanted to still hear about?
No, because we're 30 minutes. But what I wanted to do was say, so if our listeners are out there and they're trying to figure something out and they think they know the answers, they think they know, I need 20% down and I need this and I need that and I can't qualify for this. Go talk to someone like John Marroni and he can help you,
So he should probably get the call well before they even put in an offer, right?
Well, yeah, they could put the offer in, but once you put that offer in, it's a binding contract. We talk about this all the time.
It only says it on there.
I know.
Right, but everyone reads what they want to believe. Like,
why?
You know what I mean? Like,
this is a binding contract right at the top.
Pay no attention to those words.
So the point is, this creative financing out there, right? I think it's called creative.
Able to say that word?
Strategies.
Creative strategies to get you into the right product.
Yeah.
For the best bang for your buck.
Right, because we talked about that before. Someone might better have a better opportunity buying a house if they have mortgage insurance and not. In the old days, I know you're always supposed to have 80% down, but I don't think with the market has gone up in the last.
Oh, and then they get the FHA programs and VA programs and all those other programs that your lender is offering.
Yeah, absolutely.
So
so many options. Hey, I got to end with a nice story because
if it's about the crabs, I got to go.
No, it's a true story.
Okay.
It's related to Christmas. So it goes like this. Some time ago, Santa was having a bad day. It's a true story. Up in the North Pole.
I can tell it's true.
Yeah.
Nothing was going right. It's like the elves were way behind schedule on their production.
Yeah.
He's starting to get all annoyed. He goes out, look for the reindeer. One of the elves left the gate open. The reindeers have gone, because they can't fly at this time. So he's just going out of his mind. He goes in. He's like, I need a drink. He goes into the cupboard looking for his Johnny Walker Blue, and one of the elves drained it. He's got like nothing. He's ready
to. It's just a bad day all around.
He's ready to explode.
This is a real story, people.
Yeah, this is true, right?
Yeah. So all of a sudden the doorbell rings. He's just like cursing. He walks to the door and opens the door. There's this big bright light, and there was this angel. She's like, "Oh, Santa, this is such a great day, isn't it?" She goes, and I brought you this Christmas tree. Where would you like me to stick it? So from that day forward, angels on top of Christmas trees.
Yeah, you wonder about that, right?
Not anymore.
No? You know what? Thanks, John, for enlightening all of us.
You never know how these things happen.
If you can't end a show on some abuse about some angel, I think we better wrap it up, Chrissy.
Forget about when the bell rings.
Get that bell ringing soon. All right. Thanks for joining us here on the Real Estate House Party. If you need really some clarification on any of this information,
don't call me.
Give us a call. Thanks for joining us here. The Iceman, I appreciate all your expertise. Kathy Holtshouser, thank you for all your Don't roll your eyes at the end there. We'll see you next week here on the Real Estate House Party.
All right.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Café, the United Podcast Network, its partners, or affiliates.